Welcome to This Week in Mining, where we talk about how to make money in the metals and mining market. My guest today is Willem Middelkoop. Willem, it's great to have you on the show, founder of the Commodity Discovery Fund and author of The Great Reset, which is a book that's been translated into 8 languages, which is astounding. So congratulations on that success.
Thank you. But actually, The Great Reset was written by Klaus Schwab. Mine is called The Big Reset. That's
Pretty
that's a
important
good.
differentiation, the big reset. Yeah.
Yeah, and I was first. I wrote it in 2013, published it in 2014, and Klaus Schwab came around 2020. After COVID crisis, he published The Great Reset. I'm
Yeah.
even confused myself.
Okay. Yeah, that's a confusing distinction. Okay. Look, I'm excited to have you on the show today. There's like a ton of ground I want to cover with you and a lot of information I want to pull out of your brain. Let's start with your view, high level on geopolitics, Willem. If you were to imagine the world at the end of the decade, how has it changed? What does it look like?
Well, when I started researching and writing The Big Reset, the undertitle was The War on Gold and the Financial Endgame. I was writing about the thesis that we were in the last inning of the current dollar system, and we would see a lot of change coming within 10 years, so around 2020. And then in 2015, I revised the book a bit, added an extra chapter, and that extra chapter was an important one because in 2016 we published this revised edition. And this extra chapter explained how Russia and China were starting to work together to seek a reconstruction of the current world order. That was literally the text we used in the book because that came from a piece which was published in 2015 in Moscow. So for analysts who were on top of this geopolitical story and this first phase of a coming reset, it wasn't shocking to see that Russia and China were having this high-level cooperation. And President Xi and President Putin met over 40 times, one-to-one, in the last few years. And they really have a plan to attack the U.S. Hegemony and to work on a successor for the dollar. And they understand the weakness of the West. They understand the weakness of the US dollar. And this is not going to happen all in a few years. These changes take decades. And I think we just started the whole reset phase. As so much is happening now with gold breaking through 1,000 now, all these countries adding to their physical gold reserves. Today we had the news that India repatriated over 100 tons of gold from the UK to India. So lots at play. And even the wars in Ukraine and Gaza all connected to this big game.
Yeah, there's no shortage of reasons to point the finger at the United States and say this is clearly the sunset years. However, when everyone's looking one direction, usually it means we're missing something. Is there any contradictory points that you might point out that could prove this thesis either ill-timed or vulnerable?
The US won't go down without a fight, so don't expect the US to lose this war very soon. And the US will do anything they can do to make sure that Russia will be weaker and China will get weakened as well. And that's why they push countries like here in the Netherlands. Our ASML isn't allowed to export their wafer steppers to China. So there we are already in a financial economic war, maybe even world war. And the wars in Ukraine and in Gaza are the kinetic parts. There the shooting has started. But if you analyze both wars, you see a divide between the West and the rest of the world. The West had introduced these sanctions on Russia, trying to collapse the Russian economy. Well, we failed. And we failed maybe because over 140 countries worldwide didn't join the Western sanctions. 6 billion people live in these 140 countries. And we in the West, it's just 1.5 billion people. So it's a numbers game. The West is losing this war. And I think the consequences will be here for decades. But to come back to the question, the US won't go down without a fight. But we have elections coming up. We see weak leadership in the US. One guy might be in prison, the other guy might be on his way to elderly home. So nobody knows what's in store for the US. But expect more volatility, expect more tension, and expect a confrontation between China and the US, a more severe confrontation in the not too distant future.
Real quick break here, guys. If you are a mining investor, you are without question familiar with the Golden Triangle region in British Columbia. This is one of the most prolific mining regions in the world due to its vast deposits of gold, silver, and copper. Now, for the last 4 years, Dolly Varden Silver has been busy expanding their high-grade silver deposit in the Triangle, and they are backed by some of the smartest investors in the silver business, including the legendary Eric Sprott, Hecla Mining, US Global Investors, Fidelity, Delbrook Capital, Sprott Resource Corp, and more. If you are curious why the smartest money in the silver business is cozying up to Dolly Varden Silver, then hit the link beneath this video. Now, if I were to try to play devil's advocate to this, because it is the most common conversation that I have on my podcast, is so essentially that. I mean, you related it to a baseball game, and that's probably the best analogy. If the American cycle of power was a baseball game, what inning would we be in? And the consensus is like, well, I don't know, but pretty late in the game, right? The sunset years for sure. And I try to step back and say, okay, what can we learn from cycles of history recently that may shed some perspective on this? And if here's one that I found that makes me just question things a little bit. If you look at the British Empire during the end of the 18th century, right? There's no question this was the next emergent power, right? Money was flooding in. They were taking over global trade, building new colonies, becoming more affluent at home and influential abroad. But what happened during the end of the 18th century? They lost their brand new colony, the shining city on the hill, and it wasn't a third party that took it. It was their own subjects rebelling against the British Empire and saying, we're out of here. It was a rebellion. They funded the Revolutionary War from their end very aggressively and still lost. And when you fund a war and lose, there's no return on that money. It's just gone, along with the big chunk of their economy that was based there, right? And the disruption to supply chains and the loss of access to goods skyrocketed inflation. And inflation in Britain in the year 1800 was 30%. We lost our minds about 9% a couple of years ago. But so 30%, they're withdrawing from their new colonies. I mean, if you were a global citizen, the British East India Company was going bankrupt at this point in time, and they owed so much money to the British government that if they went under, then the other would as well, and all yada, yada, yada. The point is, like, if you were to look at this situation, that situation in real time, it would have been obvious that Britain's best days were behind her. And obviously we know that her best days were still to come. And it demonstrates to me how difficult it can be to predict geopolitics because of how many variables and unforeseen examples. So what would you make of that, what I just shared? And I say, I try to prove myself wrong, right? I look at it, how could I be wrong, right? What do you think?
This is a great example, actually. We know from history that every 92 years, we get a new leader in the world. We had the British Empire, then we got the US Empire, we might get the Chinese Empire now. Nobody knows. But every 92 years, we have this change. And most of these changes will lead to a lot of tension and even large wars, like world wars. But actually, the decline of the UK was a very interesting one, because in 1870, the US became the larger economy. So in 1870, US became a larger economy than the UK. But the UK is still around. Even the British pound is still around. The UK didn't collapse, and we might see the same for the US. I don't predict a collapse of the dollar anymore. The dollar will still be there. It might lose quite a bit of value. US might still be there, but what could be at risk for the US is to lose Europe as their closest allies. I just had lunch with a member of the European Parliament just today, And we discussed the fact that many European countries are starting to doubt whether they should follow the US in this wish to totally decouple from China. It's not Europe's wish, and it's not an advantage for Europe to decouple from China. If you look at companies like Mercedes, they have joint ventures there in China. So I think many European countries will start to decouple a bit maybe from the US in the next few years or even decade. And many people are starting to doubt whether China is an enemy for Europe we should be afraid of. So we understand why the US feels threatened by China, because China wants to end the role of the dollar as the only world reserve currency. But there's a growing divide between Europe and the US.
And so regardless, though, you would say we are living through a moment when we reflect back on this. When my kids are studying history in their high school classes, they'll probably look at the 2020s as that pivotal decade. This is when a lot of things changed. This is when there was a grand reshuffling of the geopolitical chessboard. Now, are you focused are you paying attention to I'm starting to call it the battle for Africa, the 9 military coups that have occurred in the Sahel region in the last 3 years, another 6 failed attempts. The US is in retreat again, similar to Afghanistan. They're withdrawing in dramatic fashion from Niger, abandoning very expensive drone bases, et cetera. And I look at this sort of similar. These coups obviously aren't grassroots, self-funded organizations. They're proxy battles between the West and the East, and the West is retreating dramatically fast. Are you watching this, and do you have any take on that, Willem?
Sure, we're commodity investors, and we have quite a bit of investments in Africa. I was in Botswana a few months ago and visited a former copper nickel mine, which went into hibernation for technical reasons. And the U.S. ambassador also visited that project. It's from Premium Nickel. And the American ambassador, when he visited that project, he told the CEO, make sure this project isn't sold to China, and we'll help you to get rich. And this clearly shows how there's this fight over assets in Africa, mainly commodities and precious metals. And why has China been able to convince so many countries in Latin America, Middle America, and Africa, and the Middle East to join their new BRICS alliance? Why have they been so successful in convincing these countries not to join the Western sanctions? I think it's because for 2 reasons. Most of these countries have China now as their largest trading partner. So if the Chinese ambassador drops by, they're willing to listen to him. There's even this joke from this African leader, and he said, when the American ambassador drops by, we get a preach. And when the Chinese ambassador drops by, we get an airport. And in a way, this is true. So there's a lot of money to be invested, to be spent by China. And this makes them quite powerful. Also, because the US has an history in the 1960s and 1970s that many of these countries in Latin America and Africa got robbed by the IMF and the World Bank because their assets have been stolen in a way by American countries. So it's very hard for the US to make friends in Africa and Latin America. And many of these countries, joined forces with China, and even Mexico wants to apply for the BRICS alliance. Mexico, is a neighbor of the US. So this BRICS alliance is getting stronger and stronger. They don't have their own currency yet. They don't have their own trading system yet. But you see the direction of the trend. The trend is towards the BRICS. We in the West are in decline now.
Yeah, and I'm okay. That's really interesting take. Appreciate that. And I figured you'd have your finger on the pulse there because of your business. And when I look at why the East might be winning that battle for sentiment across mainly the Sahel region, but largely over the rest of the continent as well, Western aid always comes with conditions, right? And maybe it should, right? A path towards democracy, no military.
Chinese aid as well.
Well, different conditions, right?
Yeah,
Different
yeah.
conditions. Yeah. They're not probably doing as deep of a dive on the human rights abuses or, the democratic election process. Russian and Chinese aid comes with different conditions, mainly allegiance and, as far as I can tell, bargain natural resource deals. I mean, that seems to be with the Wagner Group now rebranded as Africa Corp is parading around the Sahel region offering regime change protection plans. So if you were worried about a military coup,
Yeah.
they'll offer protection in exchange for access to natural resources. And Russia, I think, has had 5 frigates full of military equipment arrive at the port in Libya in just the last 18 months, and so they're packing military supplies down there. That's an interesting take. So, okay, so stepping back from the proxy battle in Africa, I'd love to get your take on the conflict in Europe. I think most people on my show make the conclusion that Russia's going to win this battle, and it's only a matter of time because through sheer volume of bodies, this is typically how they win wars. They enter a conflict very disorganized, logistics are a mess, undersupplied, blah, blah, blah. But over time and through volume of people, they get the job done. And the more aid that is provided to Ukraine just prolongs the conflict unnecessarily and increases the body count of Ukrainians. Would you agree with that, or what are your thoughts?
Yeah, yeah. Well, that I think you're right, but it also helps to work towards a peace agreement because as long as Ukraine was winning, they were talking about recovering every inch and every mile Russia took since the start of the war, since the start of the invasion. But now the pressure is on Ukraine. They might be willing to sit down at the table and to talk about peace. And I think, and this has been my opinion from the start, in the end, Ukraine will accept that Russia will own part of the eastern part of the Ukraine, and Russia will keep the Crimea region because that's very important because it's the only warm water port for the Russian Navy. So I think a settlement and some peace in this crisis is closer than many might think. So in a way, it's good that Ukraine is losing. Of course, it has been spinned in a way that we in the West, if we accept that Russia would be able to win this war, we're all at risk. Well, Russia is not trying to take over Western Europe. Of course, we have to make sure that Russia isn't tempted to start any other military actions against, for example, the Baltic states. But I think Putin, he's not the madman, he's a pretty smart guy.
Okay, now given your prediction for the balance of the decade, and I'm quite aligned with you that it'll probably be more of the same that we've had thus far, which is just to say unpredictable chaos and uncertainty. Are you surprised by the rise in gold price? Are you watching the silver price? Let's start with precious metals, and then I want to jump into some base metal stuff.
Yeah. No, not surprised at all. Actually, we've been waiting for 13 years to cross this $2,000 line and to see $2,000 to become support instead of resistance. We've seen a very strong rise towards 2,500. Expect a move towards 3,000 even this year. I think when you break such a large correction pattern, gold actually has been going sideways for 4, maybe even 11 years. And once you break a pattern like that, you can expect a very strong move. We're in that move. Silver is very undervalued compared to gold. Silver is trading still 40% lower than its top in 2011, which was the same top as 1980. So that explains why silver is having a even better run than gold. We're overweight in silver in our portfolio. And silver looks very explosive to me. $30 might become a support level now for silver. And then you can expect the next move towards $40, which can happen quite quickly, and then to $50. And then we'll have a triple top, and then it gets interesting because many people will sell and say, well, this is the triple top, silver can't break $50. But we all know how many shorts are outstanding through the futures markets, through the COMEX markets in silver. It's the highest it's the highest number of shorts out there. You need 160 days of world silver production to cover all these shorts. So if these shorts need to cover one day, and expect that to happen, you can expect something like we've seen with nickel exploding during the Russian invasion. And so things are starting to get very, very interesting indeed. And because of the related equities, the silver miners, the silver explorers, the silver developers, well, they're hardly there. They're hardly there anymore. Mention 10 good silver names. It's very hard to find them. But I think there's a lot of there's a lot of recovery potential because they have been lagging for such a long time.
When you say you're very overweight silver in the portfolio, can you expand on what that looks like, Willem?
Yeah, because silver is a very, very small market. If you would like to buy all silver production, of all yearly silver production for all silver mines in the world, is less than 35 billion. So it's a very small market. Well, in our fund, the silver holdings are just over 15%, 15%, and for such a small market, that's quite a lot. Gold is around 50%. Gold-related equities are 50% of our fund. We don't invest in the metal itself, but in listed commodities, and then we have 30% invested in the battery metals. Mainly copper projects. Copper is getting very, very interesting. We should talk about copper as well. And then we have almost 10% in uranium related listed equities.
Okay, so let's maybe go to copper. And this episode is being recorded a few days before we're publishing. Do you think the BHP Anglo saga is over? Is this now we've seen it? They've withdrawn the bid, or is there a second round?
Well, more on a broader level, we've seen many producers, larger producers, starting to eat the smaller ones. They all know copper will see an era of shortages, which actually started in 24 with the closing down of Panama Cobre in Panama, a huge copper mine. Last year, 2%, almost 2% of world copper supply was taken off the market, and that's why we have a production deficit now. We see the first signs of physical copper shortages starting to develop, and with the green revolution and everything happening with EVs, there's so much copper needed. And all the studies we receive at our desk point to a massive copper shortage in 5 to 10 years. And there's no way we can find and build enough new copper mine to close that gap. So that's getting very, very interesting. You still can buy many copper companies on a bargain. One great example, the largest copper gold discovery in Latin America, still owned by a junior, is SolGold, the London-listed SolGold. You can buy the whole company for 300 million. A company like that should be worth billions. And it's just a question of time before the Chinese will buy all of these projects. So it's getting very interesting, especially for commodity investors like us.
Yeah, I think so. We maybe consume about 28 million pounds of copper per year right now, and generally speaking, most forecasts add about 10 million to that inside of 10 years. I think inside that same 10 years, 3 of the 10 largest copper mines in the world are scheduled for closure. Do you factor in the probability of a globally coordinated recession, depression into that thesis? Does that delay your bullish sentiment? Or what's your take?
Well, we know what happens when central bankers understand that there's a global recession or depression arriving. They open the floodgates, and they will do that again. So I was telling investors there's a few risks out there. You could have massive inflation, you could have massive deflation, you could have a deflationary collapse, you could have bank holidays, But the deflationary collapse is very low on my risk scale, because central bankers can avoid a deflationary collapse always by printing money, and they will do that again. So I'm not that afraid. I'm much more afraid for a longer period of high inflation. I'm much more afraid of a longer period of debasement of currency. So as an investor, you have to hedge yourself about the debasement of currency. How do you hedge yourself? You buy all the government can't print. That can be real estate, can be land, agricultural land. But the best is to buy hard assets like precious metals, because they have this monetary function as well. And after gold and silver, I would like to buy copper, because copper is not a monetary asset. But if look what China is doing. China is hoarding copper, and in the next 20 years, we need as much copper as we have used in the last 2,000 years. We need to find a new Escondida, which is the largest copper mine in the world, every 15 months. That's what the CEO of Rio Tinto told us recently. So it's very hard to see a future where copper demand will come down severely. Also, when there's war in the air, you need more copper for the shells, and there's a lot of copper being used within the military.
Yeah, I was going to ask you, when you look at the demand forecasts, what strikes you as the biggest driver? I know a lot of people gravitate towards electric vehicles. Others say, no, it's just the decarbonization trend in general. Back in the 2000s, it was urbanization that really drove that in large number. What strikes you as the key drivers today, Willem?
It's all of that, and now include AI.
AI, energy
Well,
demand.
yeah.
Yeah.
If you do a Google search, it takes a lot less energy than if you do an AI-related search. So there's an awful lot of copper will be needed for the NVIDIAs of this world, for all the data centers. And it's all coming together. It's just a perfect storm. It's perfect storm developing for commodity investors like us, because you get shortages, just supply and demand. But then you have the debasement of currency. So many investors, also general investors, are starting to flee towards commodities because there's so much value to be found there. Then you have the geopolitical tension, where commodities are becoming almost weaponized. So the US weaponized the dollar, but you could say China and the BRICS are weaponizing gold and commodities. So that's also helpful. And then we had this 40-year period of declining interest rates and declining inflation. We broke out of that 40-year downtrend. We're at the start of a new uptrend of higher interest rates, higher inflation. Inflation is coming down now, but it's not coming down to zero. And expect the next leg up for inflation to happen because of the higher energy prices and the higher commodity prices. So it's very hard. And I know we, as commodity investors, resource investors, are all children of the bear market. We've suffered so much pain in the last 15 years. So really, people in the industry, even the experts, can't see the upside anymore. Don't be surprised that we could enter a bull market in commodities, which could take decades.
Now, we have something different today, which is these sort of digital governments. And I mean, the major tech corporations who operate almost like their own entities, complete with multi-billion-dollar defense budgets and all of it. And I think if you were Jensen Huang, right, CEO of NVIDIA, or Elon Musk, right, Tesla, and you were looking at the politicians fumble the ball when it came to securing supply for the future, you might just get proactive and take action into your own hands. And companies like, is it Kobold, right? It's Richard Branson and Bill Gates and a few others that are investing quite aggressively in copper and cobalt, specifically in Zambia, I believe. But would you expect more marriage of like quasi Silicon Valley meets the mining sector?
Well, we've seen the first deals in which end users like General Motors or Tesla are starting to invest very early stage in mining projects. We've seen that with Talon for nickel, seen with a few copper projects. So the whole environment is changing, and we needed to find funding outside the traditional funding centers. At the bottom of this bear market a few years back, we were one of the last few funds still willing to invest into early stage exploration. And we really need new kinds of money and funding entering this market, because we need to find so many new resources, and to build a new mine, we'll know it takes at least 7 years, but often takes 17 years if you want to open a big porphyry copper mine. So we need the help of end users, we've been traveling to Canada for 20 years. And when we were at PDAC in March in Toronto, we were contacted by the Dutch embassy because they wanted to talk with us about critical metals. In the last 20 years, we never heard from the Dutch government. And now everybody's starting to wake up. Something needs to be done. And they were asking us questions. How can we help to get more funding for the resource markets? But these are all very... It will take time for governments to change their approach, and the West is a bit they're scared now, because they understand China owns 70 to 90% of not of the mines but of the production and the refineries for all the critical metals. We can't build that in a few years in the West.
So how, if an investor is looking for copper exposure right now, and how would you begin to make those decisions of capital allocation?
It's actually very simple. When you're a general investor, look, we have 2,000 high net worth clients, and they can invest with us from 50K onwards. And then we look for the best project. But if you're just a retail investor, you just buy the COPX, which is an ETF. It's a basket of copper equities. You'll do very well. It already had a nice run, but it comes from a low base. So we also ourselves use a lot of ETFs. Just buy the basket. If the silver market is on fire, just buy the basket. If the uranium market is on fire, just buy the basket. Just buy the ETF. And the ETF space has been so well developed now. There are so many ETFs to choose from. We even bought a hydrogen ETF this week, because hydrogen has seen the end of a very long bear market, in our opinion. So that's the best way to play. Don't spend too much time researching all the individual companies, and don't think you should be always invested in junior exploration market. Is often much safer just to buy a basket of producers.
Would you apply that same rule to silver and gold exposure?
Yeah. Most of our investments, let's say 40% of our investments is in the major world-class discoveries, so exploration related, development stage related. And then we have another 20% is invested in ETFs, and we hardly have any individual silver or gold producers anymore. It's all ETFs now. And this is in a way a problem for many of the producers, because they, most of their trading is related to the ETFs nowadays. So we're using ETFs more and more for our own portfolio. And I think we see that a lot with institutional investors. If you look at the larger investors, who have billions and billions, the generalist investor, most of them just buy ETFs. Yeah.
Well, it is sound advice, because very frequently, and I know this because I run a mining investment conference that focuses on junior resource, right? Explorers, the highest risk end of the spectrum. And you need to commit to doing the work and doing your diligence and having a strategy and having rules, and then following those rules when you don't want to, right? When prices go the way you don't expect or the way you do expect, and you start thinking you're really smart, but to just very frequently, I see a new investor enter the game, get very excited about the potential. They read the stories of 10 baggers. They get pitched on one deal, go all in, thinking that may be the one that could change my life. And that's a go broke fast scheme. That's not a get rich quick scheme.
No.
With a strategy, it can be a get rich slow scheme if you're patient and you do the work. Correct?
Yeah. Well, that's why we differ in our approach from, let's say, Crescat Capital. These guys, they know an awful lot about the resource space, but they invest a lot of their money pre-discovery. They hope that they will make a great discovery. We stopped doing that a few years back. We only invest after the first discovery. So when we talk with brokers, we all say them, just call us after the discovery hole. Then we have millions and millions to invest, but we're not. We stopped financing juniors hoping to make that next big discovery.
Yeah, got it. Okay, we haven't touched on uranium very much. You mentioned it briefly in one of your answers there, but what's your take? There's a lot of investors asking if that ship has sailed, the easy money's been made. What's your opinion?
Well, the first money has been made. Uranium was trading around $20 per pound for years. We started to invest in uranium a long time ago. We're early buyers in Next Gen Energy, who made this huge uranium find in Saskatchewan. They're starting to develop that into a mine now. It turned from a 50 million company into a 5 billion company. Shows the value to be made when you make a serious discovery. It's a world-class discovery. But look, if you look at uranium from a more fundamental view, if you look at supply demand, there will be shortages in uranium after 2030 as well. Most metals actually will show real shortages after 2030, and uranium is no different. Why? Because uranium, of course, is needed for nuclear power plants. There's some 400 in operation worldwide. There are another 400 plants are being built or designed, and they all will need uranium. So after 2030, you'll have a perfect storm for uranium as well, just like copper. So we like uranium, but it runs like most commodities you have these runs, bull runs, which take a few months, and then it goes up 30, 40, 50%. And then you go sideways, you have a correction period. But then you should watch them and buy them on the cheap, because there will be another run. Uranium won't stop at $100 per pound. We are trading around $100 per pound now. Inflation adjusted, you could easily reach the old highs of $200 and more inflation adjusted. So I think it's not over yet.
It's when I think about that, you think about the uranium forecast into the 2030s, the copper forecast into the 2030s. You could throw nickel in there, you could throw silver in there. Broadly speaking, energy costs in general. It sets us up for a scenario where either everything in life becomes remarkably expensive, probably to the point that you might even speculate would cripple the world economy, because there's a breaking point where things become unaffordable. What's your take on that?
Well, that's why I said we reached the end of a 40-year declining trend of inflation and interest rates, lowering inflation, lower interest rates. And we started a new trend, but that's very early in that game of a trend of higher inflation, higher interest rates. So we just had, we've seen the first rally in interest rates and inflation. It's coming down now. There's a small correction. Might take a year, 18 months, and then you might have the next leg up in inflation. And one thing is certain, the debasement of currency will continue. So the flight to hard assets, to commodities will continue. And what we see, and that's getting very interesting, the general investors, the smart money, Warren Buffett said he's looking at Canada to invest. You see many of these larger investors, the billionaires, are starting to look at the commodity space, because I looked at the PE ratios of base metal producers. Rio Tinto is even PE ratio of 10, just below 10. There are many smaller base metal producers who have PE ratios of 5, 6, 7. Compare that to a company like Apple, which is called cheap because it has a PE ratio of 27. The total value of Apple is over 2,500 billion, just the value of Apple. If you would buy all listed commodity companies worldwide, the top 100 of all listed commodity companies, it's less value than just Apple.
Mm-hmm.
I'm not saying Apple is too expensive, but then the commodity companies are so undervalued. So every graph we show to investors, you can show them that the undervaluation in commodities is still near 120-year lows. And just before we arrive in this era of shortages, permanent shortages in metals we need for the green revolution, and now you get this conflict between the West and the rest of the world over commodities and everything else. So, well, I've been in this business for 20 years now. I'm a fund manager for 15 years. I've never been more bullish on the future.
I like that. Okay. Look, Willem, maybe we'll cap it there. It's been awesome having you on the show, and congrats on the performance, by the way, of the Commodity Discovery Fund. For anybody who's curious about the work you do, where should we point them today?
Yeah, the recovery only started since the last week of February. We're up 30% since then. We're open to international investors as well. You can find us easily online, cdfund.com. People can follow me on Twitter easily, and I have my own Patreon account for people who want some more in-depth research. So that's all.
You got it. All right. Thank you, everybody, for tuning in today to This Week in Mining. Thanks, Willem, for joining me in the show and allowing me to pull some intelligence out of your brain. And I will see you all next week.